Hey everyone, I hope you had a great week. We're back. John Moran here, CEO of Keller Williams Realty's At the Beach team and Smart Beach Investor. How's the real estate market? Well, it depends on who you are and what you're doing. Here's what I mean by that, okay? If you're a long-term owner, 5 years or longer, if you're gonna own your real estate here at the beach for at least 5 years or longer, markets come and go. That's me, right? I'm like you. I don't really care what's going on other than if prices drop, I'll probably become a buyer, take advantage of some short-term price discounting. But as a long-term owner, I know that over time, prices are going to go up, and I'll show you this here in just a minute. However, if I'm a short-term owner, I've got some heartburn because there's a lot going on in the market. You got high mortgage rates. You got high sales prices. You got an election coming. You got wars everywhere. You got. There's a lot of gots going on. So if you're a short-time player, 5 years or less, hoofa. I mean, insurance, HOA fees. Oh my word, a lot going on. All right. So yeah, if you're a short-time owner, not going to be here for longer than 5 years, your cost to own has got to be driving you a little bit crazy, right? The insurance is up threefold, I think, in a lot of cases. HOA fees, you feel me there? ARMs, if you bought on a adjusted rate mortgage, you've seen your rate reset. You ain't resetting down, they're resetting up. But I look at this, take a look at this. ARMs came into a great way to go back in 2009, yeah? And then they just kind of bounced around at a fairly low rate there until they bottomed out in 21, right? People were buying left and right because you got these low mortgage rates. And I'll just refi, or I'll do this, I'll do that. But now in 2022 and 3 and 4, probably even into 5, you're gonna see really high rates. So yeah, if you're resetting, you're getting penalized. That's gonna be a problem for you. So the bottom line, as I look at this, the cost to own a property here at the beach has gone up dramatically in the last couple of years, okay? Rental incomes have not kept up, and that's a problem for folks trying to keep that profit margin, the spread, high. Yeah, if you're an investor that needs a certain cap rate or a certain return or something like that, and you're a short-time player, yeah, hard right now. You're probably feeling some heartburn, for sure. Let's talk about the real estate prices for a minute, okay? Both the long-term and the short-term holders have been rewarded with super high real estate prices over the last 3 or 4 years. This could be the big get out of jail free card for some of the short-time guys that want to get out. Their liquidity might be getting a little tight, right? Because the rental income might be dropping off some and the cost to own has increased. The good news is when they go to sell, massive spread from the buy to the sell price. So you're going to get out with some significant upside there. So that might be the get out of jail free card for you. So that's cool. Let's take a look at this buy and hold scenario, right? If you're a long-term player, let's take a look at what has happened in the past. We went back and we pulled sales data in Destin, Miramar Beach, Fort Walton Beach, all the way over in Panama City, all of it, right? So let's take a look at these markets over 20 years, going back to 2004. Okay, let's start here. Destin, condo sales over 20 years, right? So you can see back in the early 2000s when we had stated income, no doc loans, right? Everybody was getting loans. This is the Big Short movie in the book. If you saw or read that, everybody was getting loans, buying stuff, developers. Heck, I almost started developing properties, but we lost out on a deal, thank God. But you can see prices jumped in 04 for a condo, at least in Destin, Fort Walton, from $399 to $520 in 1 year from 2004 to 5. But then when the subprime mortgage meltdown occurred and the Fed started shutting down loans and banks went down and you had failures, it went from what? In 05 from 520 down to 415, bounced around for a couple of years and then cratered again after all these short sales and foreclosures. In 2009, condo median sales price dropped to 259, down to 230. Do I hear 210? Yes, I do. Right in 2011 when it cratered at 210,000 is the median sales price. Okay, so if you bought in 05, you got beat up. You got beat up. And if you're a short time player, you short sold or you foreclosed, and there was a lot, and that's why the prices went down so low, because there were so many people that were upside down. They had no money down loans, okay, and they got upside down. They were buried right from the start, and they went to short sales and foreclosures, and that fed a downward cycle, okay. But then from 2011 right on through, it was a steady climb, normal, climb, normal climb, until 2020 and COVID, and the government starts printing money. You had cheap, easy money. People buy, prices to the moon. But now the difference this time, though, is we had these low rate loans, okay? You had 30-year, 15-year, 2.5%, 3.5%, 4% mortgages. So people had, and they put a lot of money down. There's a lot of cash purchases, full on no mortgages at all, right? So people are in a very strong position, as we alluded to earlier. You might be hurting from a liquidity standpoint month to month, but you're rock solid from an equity standpoint. Maybe if you bought in the last year or so, you might not be feeling that same way, but most folks have a good amount of equity. So if they do sell, they're not upside down, they're not short selling, they're simply not making as much money. So that's the Destin condos. Over time, if you buy and hold, you're rewarded, just like investing across the board. Okay, let's take a look at the houses. Same situation. They didn't see the houses. The houses in Destin, Miramar Beach and Sandestin, they didn't spike in the same way, but I think that's because we have primary residences in the houses and people live in them, and so there's more stability that negated some of the volatility early. But you can see from 2009, somewhere around there, 2011 is when it bottomed out. But there's been a climb, all right? Single family homes in Destin have been on a steady climb. And again, COVID hits, people are moving to the south. You got some new migration patterns coming, all that stuff, and demand has grown. Prices now, look at where a house in Destin was $319,000 in 2011. It got over $1 million in 2022 for the median sales price. That's a good return. That's a good return. Okay, so again, if you're playing a long game, whatever, sit back and watch. If you're short though, you can see how prices can come down. More volatile with the investment condos and some of these houses in short-term rental markets get a little more dicey, but from the primary residence, not so much. Look at 38 condo prices. Okay, same thing. They didn't see that same huge spike in the early 2000s. And I think it's just because there wasn't nearly as many properties, so it wasn't really as rampant. But it came down to the mid, 2010, 2011. And since it's been on a good run, COVID hits, money's printed, cheap loans, cheap everything, demand takes off, prices skyrocket. Okay? Probably gonna see some fallback as supply starts to increase a little bit now. We're seeing, look for sudden price softening. I don't think there's gonna be wholesale collapse like we saw in the past though. There's just too many people with too much equity. Liquidity issues, for sure. Equity issues, very unlikely, very unlikely. 38 houses, amazing. I wish I would have bought 1,000 houses back in the day. All right, so early 2000s, right? Stated income, no doc loans. Okay, everybody's buying, everybody's building, everybody's developing. Cool. Houses go up in value. All right. Subprime melts down. Lehman Brothers out of business. Salomon Brothers banking collapse. Yikes. Prices fall. Short sales, foreclosures everywhere. All right, cool. We're used to that. We've seen that. Now it's a grind, up. Boom. COVID hits. Money's cheap and easy. Goes crazy. Look at it. The median sales price last year for a house on 38. $1.6 million. Like I said, back in 2011, it was $495. It's a good return. Love it. So if you're gonna hold these properties over time, you're almost always rewarded, right? And I know past performance doesn't indicate future results, but it's a pretty good indicator, okay? Panama City Beach, what are you doing? All right, so look at these condos here. Early 2000, stated income, no doc, run up, crazy prices, jumping fast, big rewards. People got burned, short sales, foreclosures, ride the wave down. And then it's been a steady, like we've seen across the board. COVID, easy, cheap money, prices to the moon, all right? And again, I don't see a big drop in that coming. You'll see some softening as inventory goes up and supply goes up, but because of the equity positions and those locked in rates, it's gonna be, I don't think you'll see the foreclosures and short sales that drove it down last time, okay? Houses, this is really cool. Now, Panama City's housing, Panama City Beach housing is really winning because that West End, Laguna Beach West, all the way over to Inlet Beach, you saw a lot of new houses come in there, and the prices are something, right? Look at how much they've come up. Very cool, very cool. Yeah, very cool. I like that. So from that standpoint, if you're in the long haul, this market is a kickback, relax, and watch what's going on. If you're short term though, get out now. I would get out right now if I was playing a short game, just because you don't know. You don't know this election. What was the impact of that? I know there's a lot of hope that the Fed's going to lower rates. Yeah, maybe not. Still, we have some inflation issues. They're trying to get that tamed. Yeah. So if you're short term, I think I would run. I would run to safety, security, because we don't know what tomorrow brings. We can see what the values are today, and they're still pretty high, as we saw. They're still very high. What do we have to look forward to the rest of this year? Our rental's going to fall off. What's going to happen there? And we pulled this stat here from Forbes that shows the type of trips Americans are going to take in 2024. And this is kind of cool. According to these folks at Forbes, folks are going to go on trips with family and friends. Okay, we like that, because oftentimes they come to the beach. And if you look at the next one here, beach vacation, 36% of people are going to go on a beach vacation. Probably going to visit family and friends and do that. The third one's interesting though, isn't it? Road trip, road trip. The heck does that look like, I wonder? Back in my day, it looked different than probably what they're saying here. But it looks like rents are going to hold up all right. I can tell you this, from a rental standpoint, what we're seeing is heads are coming in beds. They're later and later. Just, you got just-in-time inventory or whatever it's called. And people are booking later. And they're all looking for a discount is what I'm seeing. But I'm confident they're going to show up. You're not going to get the same numbers as we got in the past on a per night basis, on a dollars per night. But you're still going to do fine, I think. It's still strong rental demand. What should you do? What should you do if you own here at the beach? Like we've been saying this whole talk, if you're a long-term owner, going to be here for longer than 5 years, kick back, enjoy you knowing that your prices are most likely to go up. All right, that's my opinion. I'm not a financial soothsayer. That's just my opinion, looking at the facts and the history and whatever. Okay, don't hold me to it if it doesn't. But I'm feeling very confident it's going to go up over time. It's going to do what it did in the past. If you're a short-time player, run to safety. Mitigate your risk. Okay, you know what the prices are now. You know what you can get now. We don't know what the future's going to hold, and if they drop for some reason, you don't want to have to deal with that if you're a short-term player. Okay, if that's something you want to do, if you want to talk about any of this, send an email. info@smartbeachinvestor.com. This is what we do. We help our clients max out their positions as buyers, owners, and sellers. If you want to get higher rent, we're crushing, absolutely still crushing on our rent. So we like that too. If you want to talk about your rent, give us a call. We do that too. smartbeachinvestor.com. Yeah, so if you have any questions at all, just send me an email. Happy to address them, all right? Other than that, we're going to start looking at who owns the beach. We got an attorney coming in. This is going to be interesting in a couple weeks. Going to be a thing. Going to be. I'll just leave it there. So hey, that's what's going on this week. I hope you have an awesome week. See you next week.